following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, your bi-weekly source for all things options related, a dash of options wit, a sprinkle of options wisdom, and perhaps a cherry on top that is a little bit of fun. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. And joining me on the old Option Block All-Star panel today, starting off directly to my left, or perhaps to the right, I don't know. I don't know where you lean, Uncle Mike, so we'll call you to the left today. Good old Uncle Mike Tusaw from Know Your Options, Inc.
Hey, I'd rather, if I'm to your left, does that make me more to the right?
I think so.
Okay, because I try not to go to either direction, but if I had to pick one, I would definitely pick to the right.
I guess if you're to my left and that makes you far right, then that makes you more right, then that makes me some crazy ultra conservative. He's to the left of me, but he's still very right of center. Yes, we're getting into some weird territory now, but before we go down that road even further and alienate a full...
More concerned about being right and wrong as opposed to right and left. How about we leave it at that?
There we go. There we go. I like it. All right. And speaking of alienating our listeners, we're also joined by the man from the land of corn, a.k.a. Options Express, one John Girgus, holding down the Options Express hot seat today. Mr. Girgus, welcome to the show, sir.
Yeah, good to be here. I see that you're in my neck of the woods and able to see how I come up with those such good and accurate crop reports in the area where I live out there.
Yes, you have quite the pulse on the corn crop, let me just say. I was out in your neck of the woods this weekend, and it was certainly corn country. And I was able to see
surrounded by on four sides and on my house of corn. So that's one of the topics that I will be hitting on later in the show. I also have one of the senior brokers from the desk in here as well, kind of shadowing me right now. He's shown a little interest in the podcast, and maybe bring him up to speed. So I got David V sitting next to me in the chair. Can't hear a word of the podcast, but he's going to sit here and stare at me for about the next hour.
Yeah, we need to get him some branching headphones or something so he could join in the fun. But yes, always fun to rope in some new fresh meat from the OX team so we can get some fresh perspectives here on the Option Block. And speaking of perspectives, it's time once again for the Trading Block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, where we break down what was moving the markets, what was lighting up the old street today. And before we do that, we are joined, better late than never, by good old Mark Sebastian from OptionPit.com. That dull roar of a jet engine means he has joined us. Mr. Sebastian, how are things in the land of the pit?
Things are good. Things are busy. Things are great.
Glad to hear it. Are you recording from L side as usual?
I am indeed.
So
I am indeed.
So listeners, if you hear the melodic sounds of the L train going by his window, you know that the commuters are indeed waving to Mr. Mark Sebastian as they go by.
There you go. Well, I am a bit of a celebrity now. I don't know if you know that.
Oh, are you?
Yes. I don't know if you know this, but I'm kind of a big deal.
I did not know that. I'll have to mark that down on my calendar. Today is October 1st, 2012, and Mark Sebastian is officially a celebrity and a big deal. I will make note of that.
Well, I didn't say celebrity, but I did say a big deal.
Okay. We'll scale it back a little bit.
Mark the big deal, Sebastian.
That's exactly.
You've heard of the real deal? Sebastian's the big deal.
I know when I hit it. You want to know when I hit it, Mark? It's when I became a guest speaker for Know Your Options Inc. I knew I'd arrived.
That is the big time. When you're doing the webinars, when you're on the webinar train, the old webinar choo-choo, as my little guy would like to say, then you are indeed rolling with the big boys.
It says webinar choo-choo.
Well, I'll say this. This is with Sebastian's sign-up now. We got a shot at breaking our all-time Know Your Options attendance record. We're close right now, or I don't know if we'll get there, but it'll be close.
I did put out an email blast this morning.
Yeah, pretty much it showed.
Yeah.
All right, well, let's dive into, speaking of showing, let's show and sell. Of course, it was a mild day on the old street today. Most of the major indices closing relatively unched on the day. S&P up fractionally. NASDAQ down fractionally, and the Dow up a wee bit more, but nothing really moving the old boat. The biggest move we saw today was good old VIX cash. Charging up about 4% to the upside, getting some weekend love back, getting a little bit of other love, looks like, stuck in there as well. So why don't we start there, Mr. Sabas? What did you think of today's action in the VIX?
You know, a little surprising. Well, not really, I guess. I'm actually going to be writing about that on my blog tonight. Actual historical volatility continues to be in the toilet. The market is not going anywhere. And here we have the VIX over the last week moving from 14 to 16.5. Now, do I think it's going to get much higher? Probably not. Maybe 17. What I think that the effect that we're seeing is non-farms. I think people are really looking at those because, currently the election looks like it's going one way. If the numbers come in negative, which I think there's a chance they could, it could completely turn everything on its head. There is all kinds of really interesting information out there. So, the other part that I think is interesting is that the cash and the futures are on top of each other. So what does that mean? Well, I don't think it means we're going down. I don't think it means going up, but I do think it means something is going to happen. We're going to get some sort of another big move, maybe higher, maybe lower. As of late, all the big moves have been higher. So, I am a believer in the trend is my friend until it stops being my friend.
It looks like
on top of that, the market always goes up. I mean, the other interesting
thing. This is America.
Of course.
Yeah.
Right.
And with this week with non-farm payrolls coming out, there's a lot of things coming on that I guess we'll talk about in Around the Block that could definitely be a catalyst for a bigger move.
Yes, yeah. we are definitely in coin flip territory from a VIX and volatility perspective. Whenever they line up like that, it gets into coin flip land. You're right, Mark. We have been leaning heavily towards the upside, so trend is leaning that direction.
Yeah, and like I said, it definitely tells us that something's going to happen.
Of course, if you're in the Romney camp right now, you're got your fingers crossed for a non-farms disaster.
But that's not the point. The point is that we're going to get some volatility here. We might get a one-day surge in realized vol, and that could be that.
And that's probably all it's going to be, really. We've seen that kind of the one-day blips where we have these kind of high vol days, and then we go right back down to the doldrums again. So these guys,
that depends. If it's a move higher, yes. If it's a move lower, I think there'll be some follow-through.
What's a move lower? I haven't seen one of those in so long. I'm not sure what you're talking about.
I know. It was funny last week. People are like, "Oh, the S&P is down $14." That's 1%, folks, and that's what you're worried about? I mean, we've not had – if you pull up a 3-month chart, you will not find a down 20-point day in the S&Ps.
Yeah, it has. It's been quite a while. We talked about that, recently. That's been since June since we had any real movement to the downside in the S&P. So perhaps we're overdue if you fall into that line of thinking. Of course, speaking of the months, it is, of course, that time of month and not just your time of the month, Mr. Sebastian, but also that time of month when the numbers come out, the big options sheer numbers, and not surprise, it was another pretty dreary month from an options perspective. We saw the numbers come out of OCC today, and then overall cleared contract volume from the OCC, which is of course the Options Clearing Corporation, down 6% from September of last year. We also saw total volume just for the year-to-date volume is also down a whopping 14% since this point last year. Of course, remember we had some data points last year, like the downgrade in August and things like that, that really sent us off to the races. And of course, we had vol all over the place at this time last year. So it's kind of comparing a very tranquil time to a very volatile time. So there is a little bit of that. Not surprisingly, ADV in September was down 7% as well, to about 17.5 million contracts, 17.3 million contracts a day, which is not exactly lighting up the tape volume. And year-to-date, 14%. Now, we've talked in the past and more recent shows about dividend trades and how dangerous those could be, and dividends in the sky. Oh, yeah. And people wrote in, people have asked us, why are exchanges doing this? Why do exchanges do this? Well, of course, if you look at...
There are so many questions which could be followed with, why are exchanges doing this? Yes,
that's true. That's true. But if you look at the numbers, ISE, we love to look at the ISE numbers because they're one of the few exchanges that actually parses out the div trades because they're very anti-div trade. And according to their numbers this past month, dividend trades made up a whopping almost 9% of the overall industry volume. I guess that's not surprising. When overall volume is down, these same trades are still going up, so they account for a larger percentage. Typically, we see somewhere in the 3 to 5%, so this might be the highest I've ever seen, almost 10% for the month of September. And that gives you a clear handle on why, if you're an exchange like the PHLX, you have a strong incentive to put up this number. Economic incentive, profit incentive notwithstanding, it gives you a lion's share of almost 10% of the market. And there are exchanges out there that have less than that total for their volume. So you could see why some exchanges would be champing at the bit, as you will, to put up this no profit, no interest volume. But speaking on the other end of that coin, instead of no profit volume, there has been some profit, or perhaps negative profit of late. Of course, Uncle Mike's chief holding Apple closing down nearly 8 handles again today, or about a little over 1% to about 660 on the day. Uncle Mike, this not going to let you out. Have you made your peace with that?
I don't know. We'll roll up the collar again. We'll just keep doing it. I mean,
let me ask you this. You've had clients who've been riding it the whole way up. There's been a little bit of volatility now. Are they starting now? We're seeing a little bit more pronounced trend to the downside recently. Are they starting to freak out? Are they calling you up with the opposite? Instead of saying, why are you wasting money on hedges? Are they saying, why aren't you hedging tighter? Or have they started to get that religion a little bit yet?
Nope, it's still Apple's going to 17,000.
And that is how you know that it's over. I'm sorry, but...
Well, but the thing is, though, is that's I've been getting those phone calls since 300.
Yeah, I mean, I get it. Apple is going to go higher, but it is not going to be forever.
Yeah, I'm with Mark on that one. This is not one that I've been a big Apple proponent for a long time on this show, and we're at the top end.
Yeah, I think we are. I mean, as soon as I hear about people putting into their kids' college saving funds, I know that the ship has sailed. Because we now have, and on top of that, the reviews on the iPhone 5 are not particularly great. I don't know if you guys have heard around.
Yeah, but they slammed the iPhone 4S too, and the thing sold like hotcakes. I think the pundits and the people are kind of mutually disagreeing on that point.
Yeah, I think you've got the fanboys that are still doing that, and they sold their Surge. I'll be interested to see what kind of follow-through they have. They got their pre-order, and, have you picked up one of them?
Yeah, it feels like a candy bar.
Have you felt it?
Yeah, it's very, very light.
It feels junky. It feels, we did talk about this. It feels like a Mattel toy. It's not something that's going to work.
Speaking of junk, Groupon, way to the south of that 501 level. Mr. Girgus, how's it looking in the Groupon holding? Are you doubling down, writing some downside puts? Are you rolling to the upside? What's up?
I wish Sebastian would have gave me his opinion whether I should have, bought more help.
He's been so muted on this topic. I know.
He said one thing. No, I'm still in it. I'm in it to win it. I'm in for the long haul. We'll see what happens.
Then, if you're in it, then you're clearly not in it to win it.
Correct. Yes. No. You know what? The lady, one of the oldest ladies in the group over here, she works in QA, said, "Hey, I bought my first Groupon. I really like this thing." I'm like, "It's catching on." That's all I needed to hear. So I'm gonna go out and buy some more.
There you go, baby. Double down. 473. We're close to. That's your magic price level. I'll see you. Yep. Yeah, you'll be legging into some bullish risk reversals before you know it. Just doubling down. Maybe some repair trades like good old Uncle Mike. Speaking of risk reversals, and we talked about it before on the show. People always like to write in talking about trading ideas. I think Andrew and I have talked about. He likes the gaming sector, and he and I have talked about Activision in the past, ATVI, and I've always talked about how that's been one of my favorite return candidates. You have certain names that you like, and you like to go back to them for certain strategies. And Activision is starting to come up on my radar again, getting into some interesting price levels. Volatility-wise, it's trading around 30%, which is all right, but it's not near the highest levels we've seen in the last couple of years of like 40 or so percent. But starting to line up for some interesting bullish risk reversal candidates, and I have keeping an eye on that one. I know Andrew's been looking at it a little bit as well, but anyone else here looking at Activision, or I know Uncle Mike, you've been talking about Ford. You still active in Ford? You had the cover calls out in November, right?
We're actually out in January right now. We're probably going to be doing a roll here in the next couple days, just because it's come back a little bit. So we're going to probably reinitiate a repair strategy, and if it repairs itself before I get a chance to finish the leg again like I did last time, that would be a great problem. But as of now, we're still out in the January 11s at this point.
And of course, we saw the probably big earnings news of the past week was, of course, RIMM. Didn't work out too well for the premium buyers on that side of the fence. It had a bit of a gap, opened up the next day, though, well off the highs of about 8.5 that we saw in the after hours. Perhaps another argument for an after hours closing open interest book for retail. It might have been able to make some of those trades pay off.
Hell no. I mean, if you're dumb enough to play.
There you go. I love it. See, you just got to poke him a little bit, and he gets going.
If you're dumb enough to play into an earnings thing, and you can't trade the stock around it, then you deserve everything you get.
Yeah. Yes and no. I agree to that to a certain extent. But also, there's a lot of people who just aren't capitalized enough to do it. They have the intention, perhaps the knowledge. It's just a difficult thing, So you hate to cut off a full half of the spectrum of option strategies for them, without even giving them a chance. And that could give them a chance.
No. Well, they've already cut off so many other option strategies unilaterally. I don't know why this would be any different. You can't sell a time spread. You might leave the short open. So we're going to charge you the entire interest amount.
That's true.
You know what this would be an opportunity for would be the single stock futures. If I'm a single stock future promoter, I'd have 24-hour single stock futures trading around earnings announcements then.
We'll have to have Mark Esposito on the show from One Chicago to do his song and dance for those guys. But yeah, One Chicago has really they've just struggled nonstop.
Well, they can't get cross margin.
No. And the brokers...
No one wants them.
No one wants them. The brokers, no offense, John, but the brokers have really put their foot on the neck of One Chicago because that really, their business eats into the margin business quite a bit. So no one's really heavily promoted that name. Even the exchanges who are the co-owners of it, it was SIBO and CME and Board of Trade back in the day. None of them have really done much to promote it. It's kind of just languished. It's been an interesting idea. But a lot of those things, those benefits they've talked about, like the margin benefits, selling on an short, not having to wait for an uptick, those benefits are not really what they used to be when they were first announced. They're not as relevant anymore. So a lot of the promise of that product has somewhat been stripped away of late. I still like them. I think you're right, Uncle Mike. A lot of traders who are using underlying should be using single stock futures in a lot of cases because they have a lot of advantages for them. But good luck finding them. Good luck finding information about them with your typical brokerage firm or people really pushing it for them. They're not out there heavily in any way, shape, or form.
Yeah, we offer them here, but nobody trades them, and we don't recommend them when people call in. I mean, the leverage is great, but you can't get any cross margin on them. You can't even exercise them because most FCMs aren't security licensed or security dealers.
Well, I mean, the other thing with it too, a lot of times you can just buy a deep in the money call or a deep in the money put and achieve the same thing with the same amount of risk or with less risk because it's limited.
Is Mark Esposito the one making all the markets in it, or is he just the?
I don't think he's with Chicago
one-man show. Is he not? I thought he was. The last man standing over there.
I'm not 100% sure on this, but rumor has it, and my birdies aren't near as accurate as yours, Mark. But rumor has it that he is not. But I'm not 100% on that.
Well, wouldn't shock me. I actually had a client that was like, "Oh, I love these things. I do this reversal trade, blah blah blah." I was like, "You are the only person that loves this thing."
Well, I remember I remember when I was at Options Express and I was saying, well, what are we going to do about single stock futures? This was when Express Trade came over. I said, well, what are we going to do about the single stock futures? Are they going to be allowed to trade them in this specific platform? And someone said no. And then I remember Mike Zaremski said, well, both of the people that do that will be mad then.
Yeah, it's one of those things. I remember them trying to market it to market makers when we were all still on the floor and they were still first starting to push that product. And it just never caught on there, and it just has languished and languished and languished ever since. You're right. It's kind of like the alpha indices we talked about on the show in the past. A very interesting, a very intriguing product that has suffered from a lot of different areas. Promotion being definitely one of them.
After hours earnings plays on single stock futures. One Chicago, you can send me your fee then.
There you go. That would suddenly make them relevant in the conversation again at the very least. It'll put them in the headlines. Maybe that's what they need to do. Something jarring like that to catch the eye of the trading audience. Anything else before we dive into the odd block? What was catching your eye, Mr. Girgus, Uncle Mike, in today's action?
The grains were quiet after a busy day on Friday. Same with energy and gold. We see gold run up since the announcement of QE3, but not big moves, just continual nice gradual up moves, but getting some talk there. This might be a near-term top in gold. We'll wait and see. But the commodities have been quiet as well too, kind of mirroring the OCC numbers that came out today.
I was envious of Girgus today. I wanted to do some day trading on this market,
but you were unable to.
No, I just don't.
not even for the Uncle Mike personal account.
Not even for the Uncle Mike I always try and keep things as the same for my account as my clients as best as possible.
Really?
What about your gambling account? You got to keep a little money to, sling it.
Otherwise known as what is your gambling account actually? What are the notes on your gambling account in over at OX?
Do the opposite of your instincts.
In your play account, your gambling account, did the risk manager write some sort of note that was like, if John Girgus ever decides to put some real money in here, we are going to close this account immediately? For risk management purposes.
Yeah, John and the risk manager on first name basis is definitely after opening that account.
I've gotten phone calls at 5 to 3 going, when are you going to close out this Google put? So yeah, they don't like babysitting me.
See, listeners, it's not just you. Even the guys in the OX hot seat get that call from on high every now and then. When are you going to close out this Groupon? They keep calling. You're taking us down with you, Girgus. All right, and with that, we're going to close out the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and welcome to the odd block. We're going to kick things off here with FLIR Systems, ticker symbol FLIR. This is a designer and manufacturer and marketer of thermal imaging systems. So FLIR, I'm assuming, stands for forward-looking infrared, some of those night vision goggles, other things we see on those military devices over in Iraq and Afghanistan. And this one's had interesting run of late. It's kind of been consolidating around in the 20 to 21 handles over the past few months. We saw some big buys driving it up back in late July. It's since kind of come off a little bit. This is a name that typically isn't really that active, only about 100 some odd contracts a day. And they did substantially more than that today, about 1,300 or about 10x their ADV. All of that really in one substantial, or relatively substantial, at least for this name, upside call buy. We saw the Nove 22s lighting up the tape right after the opening bell this morning, lifting the offer for ranges between 25 and 35 cents. Like I said, this is a name that does about 100 some odd contracts a day. They did almost 1,300 just of these Nove calls. This is someone came in and scooped up a bunch of them for about a 31% vol, which is a little bit higher than we've seen of late, hovering around 25% in the Nove month here in FLIR. So this one, obviously someone loading up thinking that there's some upside to go here in ticker symbol FLIR. I'm guessing I know the answer to this, but any of you guys watching FLIR of late?
I used to trade FLIR baseball cards.
A little bit different.
Not tops or upper deck?
Yeah, no, I had the Billy Ripken one with the dirty
Cuss word on the bat. Yeah.
Yeah. So that was one of my favorite ones.
The cuss word.
No, do you remember that?
Uncle Mike. No,
that was a big deal when he did that.
I remember.
Yeah, for those of you that don't remember, Cal Ripken, his brother, Billy Ripken, was far less successful a baseball player as Cal, but still managed to hang out in the major leagues for about 5 or 6 years. And for his FLIR 1989 baseball card, he had a bat. He posed with a bat, and at the bottom of the bat, it had a word that starts with F and rhymes with duck, followed by the word face written on the bottom of it. And nobody at FLIR noticed until horrified mothers started pointing it out to
I'd never heard that before. That's great.
and so there are several variations in the card that make it more or less valuable.
So one brother stands out by playing well for the most part and playing a lot at the very least. And the other one stands out by scarving some naughty bits into his bat. I guess we got to do whatever you got to do.
Exactly.
Next up on the old odd block, we have Celldex Therapeutics, ticker symbol CLDX. This is a biopharma name. They have done some immunotherapy treatments. They closed today about $6.38, up about 1.5%. This is a name that typically, actually, for such a low price level name, they actually have been relatively active, almost 500 contracts a day. For a name like this, that's quite a bit, actually. And we actually saw today doing well over 4,000, pretty much all of that, in two massive blasts. Someone came out and nailed out two large 2,000 lot blocks of the DS5 puts, blasting them out for 20 cents, the first block, and then chasing that one up right away to the downside with another blast of another 2,000 for 15 cents. There's no open interest to speak of, only 100 contracts on this strike. So this is all opening paper. So this another person coming in doing about 10x of the ADV in one trade on one strike. Yet again, we talk a lot all the time on the show about the impact of open interest and things like that on trading. Here's someone who's obviously not concerned about putting up 10x the ADV in one trade on one strike. As long as you can get that off in the bid-ask spread, you're not doing too bad. This guy nailing about a 54% or so vol level. Actually, no, 59%, I should say, which is much higher than we've seen trading around the 40% level on these strikes in the past. So all in all, a pretty substantial near-term bet here that CLDX has hit or is going to stay above this price level here on the right around the 5 handle by December. And then baseball. And then let's see, last up here on the old...
I love when we do that to you, where you're like talking and then you just look at the chat.
That's my own fault for looking. I should know better by now.
Something under your breath. Folks, if you haven't caught the show live...
Yes, you really should. It's a treat.
We do this over Skype, and we say some things to each other over Skype that maybe doesn't make the show.
Yes.
And,
would never make the show in a million years.
In this case, somebody found the baseball card in question, and it caught Mark laughing.
Speaking of laughing, of course, Wells Fargo. Actually, it's not really that funny of a name, but Uncle Mike likes these financials, so I thought we'd put him in here. Of course, he's more of an XLF guy, but we'll go straight up WFC today. Closing today, 34.70, about 0.5% today. It's a name that does about 60,000 contracts a day of late, and today actually was a mild day, but only about 30,000 today. But they've been holding around their 200-day moving average for the last few months now. So this name has been showing some resiliency. Obviously, this is Wells Fargo Bank Holding Company. They hit their 52-week high is actually 36.60, so they're not that far off it. They hit that a couple of weeks ago, and right after the opening bell this morning, we saw the weeklies, the OC5 weekly puts. Actually, the OC5, 34 half puts in the weeklies, lighting up the old tape this morning with someone coming in and really picking up some very near-term downside here in WFC. They picked up about 2,600, lifting the offer in the first block for about 20 cents. Came in a couple minutes later, purchased another 1,600 of those same puts for price levels around 19 to 21 cents. The total volume on that strike was a little bit over 4,000 contracts, which is dramatically more than the only 600 contracts that are open on that strike. So all brand new, all opening positioning, and even more interestingly, very, very near term here in Wells Fargo. I don't see any corporate actions or events or anything else that's really coming up that would precipitate such a near-term protection level. Doesn't look like a roll either, because none of the strikes except for the OC 34 puts in the weeklies have any real open interest to speak of, and certainly not enough to cover all 4,000 plus contracts of this. So it looks like someone here is prepping for some very, very near-term perhaps corrections here in Wells Fargo. Of course, these weeklies have about 4 days to go until they expire, so we'll keep an eye on them. Maybe we'll do an update on Friday's show to see if these puts have paid off. And with that, we're going to close out the old odd block for today and dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the old Express Block. This is where I hand the reins of the show over to the man from corn country himself, good old John Girgus. Mr. Girgus, what is lighting up your personal tape aside from corn and Groupon?
Yeah, I'm holding on to that Groupon to the very bitter end. It was kind of a quiet day on the desk. We got a lot of people kind of positioning themselves, just talking up some of the numbers that Sebastian and Tusa alluded to earlier in the show, with the ADP coming out Wednesday morning, mid-Wednesday, I believe we got the FOMC minutes. And then the big non-farm payroll on Friday, with the election around the corner, with the markets in QE3 all in the news, this non-farm payroll number, always, in my book, the most important one of the month, becoming ever more center stage here at Options Express and for the retail clients. Other than that, on the development front, we have a 9.8 release coming out mid-November, and for about 2 years, we've had a lot of futures and futures options traders asking us to please, begging us to release weekly options on futures. People think it's easy to get something turned on the website. It takes a lot of development, a lot of testing, and we've been doing that, the weekly options. So the first one to be released will be weekly options on the indices. That's going to be the NASDAQ, Mini Dow, and Mini S&P. We should have those out, like I said, mid-November. So keep an eye on that as well. As I said earlier, the corn and the rest of the grains last Friday, if you didn't see, corn was limit up, which in this point in time is, I believe, 40 cents. We had corn stocks report now during the market opening. As you remember, in May, the grains went to a 21-hour system. So this 7:30 Central report that comes out does so during market hours, gets extremely volatile. But they're estimating 988 million bushels, approximately 132 million bushels below recent trade estimates, and 200 million bushels below the previous month's estimates. So that really pushed corn higher. And as I said all along, the corn looks terrible and soybeans look decent. But when you have a bad number like that, when it comes to stocks, it brings everything up. So November beans also on Friday closed up 27 cents and a half higher. December wheat closed up, 44 cents higher. There's also Minneapolis wheat and KC wheat, but no one pays attention to those anymore at all.
I love some KC wheat. What are you talking about?
Yeah, no one likes the spring wheat anymore. No one likes the KC wheat. It's started to see those little exchanges kind of die off, but or be absorbed into other bigger exchanges. And as always, we have our apple. I mean, it still accounts for a large majority of our volume, of our daily call volume. I thought it was interesting to hear Sebastian kind of, saying that it's feeling a little toppy up here. And I just, I want to speak up, but I know I cannot call tops anymore in Apple since I've been doing it since about 450.
Yeah, I know.
Yeah, I think all of us have shot our wads on that one. We've all been calling it since like 380, and it's been pretty much mocking us the whole way up.
Yeah, I bought a lot of puts on the way up, and I mean, I bought I've tried this strategy where I just buy deep in the money puts and just like, okay, all I got to do is wait for the time and I couldn't even get those right. I mean, the thing just goes up, and people continually on the desk will buy these, at the money call spreads and just make money, or these outrights. It's nice to see a day like the last couple of days. I wish Tucson, told me a day or two earlier that he was, short the 690s and was going to get called out, because that was literally the high for that stock.
Other than that, you've been playing to the dark side a little bit, though. You've been actually writing some calls and upside call spreads too. You've been a little more aggressive than just buying those downside puts. So you've been laughing in the teeth of Apple for a while there, writing that upside. That's a dangerous move with the zealots working against you these days. Yeah,
I've done some verticals out there and have gotten away with it by the skin of my teeth. I mean, that Friday they go off $1 out of the money, and the next day they're up $15 in my face. So, I've taken a long break from Apple, and I think I've learned my lesson, and we'll stay away from it for a long time as well, because it's just not. I've tried to pick highs before. Maybe I should just stick to the futures, because it's Apple. It's terrible. Just it's my personal widowmaker. It's my Cisco.
While we're hitting here on Apple for a second, and you also mentioned some new product stuff with the weeklies earlier in your Xpress Block. This is probably a perfect time to mention. We've talked quite a bit on this show about the mini contracts, particularly the mini Apple contracts. When are they coming? When are they coming? When are they coming? Well, today is the day. The SEC is voting on these mini contracts as we speak, probably, and the OCC has already put out statements saying that they are preparing to accommodate them if they do get approval. It looks like they probably will get approval. So it looks like if they pass approval today, it shouldn't be much longer until we start seeing those actually hitting our trading accounts. So all those listeners who've written in saying, when will we see minis? When will we see minis? Looking much closer. I would say maybe within the next month or so, if all this stuff can shake out, and then they can get the products listed and the brokers can get it all, all the devils in the details with these things. But if the approval comes down today, then the rest is going to follow shortly thereafter. So there you go, listeners. Another new product tip here, or mention on the old Xpress Block. Anything else taking up your day today?
Well, yeah, just on those minis. Yeah, we've had a lot of meetings behind the scenes to try to figure out how do we want to, let people enter these orders without making it confusing. People are still struggling with getting the correct expiration when it comes to weeklies, and now you have, what we're doing is go standard, non-standard, and then these dailies, not dailies. See, I'm getting already confused. These minis. And we're trying to make it as easy as possible. But from what we heard, that if the SEC approves today, we should have 45 to 90 days to kind of figure that all out. I think what the industry is doing to begin with is having a different symbol. So everything that does trade in minis will have the number 8 on the end of it, AAPL 8, GOOG 8. But we don't like that format in the sense that then you have to remember.
That's not confusing at all.
No, I know, right?
Where the hell does 8 come from? I mean, I get where they're doing it, but that's totally counterintuitive.
I don't know where they're coming with that either, but that's kind of the format they have right now. We may have to use that if we can't get this figured out in the next 45 days. They give us 90 days, we'll have it done. But they keep saying we're going to get approved, and then the time seems to be right now. We like something a little bit more simpler, where you just select something from a drop-down menu. So, got to keep it retail focused and make it easy as possible, because trading is hard enough as it is.
Yeah, so that'll be nice if they finally get those out. Then we can have people doing, instead of doing their, can actually write calls on their whatever they have, 50 shares of Apple or whatever the case may be. A lot of interesting stuff that they can do with that they've been kind of out of the conversation for quite a while here. Anything else lighting up OX land these days, Uncle Mike, Mr. Girgus?
No, that's about it, Mark.
All right. Thank you for that update, scintillating as usual, Mr. G. And now we're going to close out the old Xpress Block and dive right into the old mailbag.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, and if you weren't convinced before this that the reach of the option block is inescapable and indeed universal, our first email comes in here all the way from Mumbai. And we have EJ Singh writing in here from Mumbai. He says, I appreciated your discussion of early dividend exercise on the last show. Thank you, EJ. He goes on to say, you mentioned the dividend and assignment risk on SPY, but does this also apply to SPX? Thanks very much for a fantastic options program. You guys really are unique in the world of options. He goes on to, with a little bit of extra love, he says, and if Mark, voice of options Longo, ever wants to do a radio show or an options options presentation here in India, I'd be happy to help arrange it. You have a large audience around here. Well, it's good to know we have some love there in good old
next live
Mumbai.
podcast, Mumbai.
I'm thinking, if OX wants to pony up the plane tickets, Mumbai, here we come.
We need to get somebody to write. We need to get They Might Be Giants to write a new song called "It's Mumbai, Not Bombay."
There you go. That actually would be useful, I think, for a lot of people. I think we could have a nice show, live show, get some Vindaloo, some naan. I would love to do that. That'd be fantastic.
That'd be great.
Or worst case, we record one from Devon here on the north side, which is Little India here in Chicago. And that can almost substitute in a pinch. But yes, the second part of your question, thank you very much for that. Very kind words. We've been asked many times if we're going to go do something in India or maybe make an Options Insider variant that is key towards the Indian market. So far, we haven't gone down that road. Thankfully, a lot of English speakers in India, so we've had a lot of great penetration in India already, as you have already said. But we might be interested in expanding more and maybe doing some more India-focused products down the road as we continue to expand the team here at Insider. But as to the first part of your question, very simple, very straightforward. We talked obviously about the early exercise risk in SPY. Does that apply to SPX? The answer is no, and the reason for that, of course, your SPX European type style product, that means there is no exercise risk, at least in terms of you having to go and actually choose whether to exercise the calls or not. There is SPX, of course, an European style product, so you don't have to worry about, or at least you don't have the option, I should say, pun intended, of coming in and exercising your calls to collect any dividend like you do with SPY, which is, of course, American style. Anything else you guys want to say, weighing in on this dividend topic one last time before we close it out?
No, I'm good.
Nope. Okay, we're good. Okay. This next question is more, actually, it is a comment, and it comes from our comment system on the old optionsinsider.com. This comes from someone goes by the handle Thompson, and he's writing in about the dividend bungle as well, which is, of course, some articles we posted on, not only on the talking about it on the show, the dividend bungle, but also an article kind of outlining what happened with that SPY trade last week or 2 weeks ago now, and just how all that money was left on the table. And he comments, this guy was a serious idiot. How could you do a trade like this without even knowing how to properly execute the dividend trade? And he goes on to say, how can the exchanges continue to allow this behavior? Aren't errors like this just feeding into the belief that options are a risky and highly rigged game? It's absurd. And this kind of feeds into what we were talking about before. I don't have the exact market share numbers in front of me right now for last month, but the 2 months ago, Philly, which is where the lion's share of these trades go up, was hovering about 20% of overall market share. And given that exchange does the lion's share, I'd say 80 to 90% of the dividend trades, I'd say that share might even be higher this month because, of course, we saw the dividend trades themselves almost accounted for 10% of the overall industry volume. So if Philly gets the lion's share of that, they're looking at nearly 10% of extra volume on their books. And why do they do that? Well, the money isn't really there because they're not making much money on it. But it's great for this time of month. They can tout themselves as the third largest options exchange in the U.S. or in the world. There's a lot of great ways you could spin that. So it's really more of a marketing expense for them. But, as we've, and a PR expense, people like us talk about it when they do these things. But on the flip side, we've talked about it a little bit on this previous show, of course, that bungle really outlines that there is risk associated with these. And I don't think any of us would be surprised to see whether it's the exchanges or the brokerage firms or anyone else really starting to clamp down on outside parties trying to execute these dividend trades. Maybe that's a good question, actually, John. I don't know how many of your customers really try to do this on the OX platform, or if it's even really a viable thing to go through OX unless you have some really favorable margin to really do this. But A, do you have any clients who are really trying to do these and game some dividends? And then B, has the SPY debacle in recent weeks caused you guys to take a second look at that stuff?
No, you don't see people doing this dividend play at Options Express. I mean, at $1.25 an option, I mean, they're just not they're not looking to put on size deep in the money calls or anything like that. The problem we have is that so many retail clients are now, trading these verticals and these condors that they're not realizing, what risk they have. And I know we beat a dead horse here talking about it, but you'd not believe it how many. The amount of negative calls I get regarding this dividend play each Friday morning, it just continues to grow.
Yeah, I didn't expect much in the way of retail participation on this because they don't have. You're right, they don't have the fee caps that these professionals do to be able to execute hundreds of thousands or millions of contracts. If you're paying $1 a quarter, the dividend's only 78 cents. Not exactly a worthwhile trade to do there. So yeah, interesting stuff here. Thank you for writing in, Thompson. Of course, if you would like to follow in the footsteps of EJ here or from Mr. Thompson, then by all means, surf on over to theoptionsinsider.com. You can leave a comment there for us on the articles we're working on. Some of you have written in. We're working on adding the commenting directly to the show pages itself. So now you can comment directly on the episodes as opposed to just the articles we post linking to the episodes. We're getting there. It's a little bit of some behind-the-scenes work. Still needs to be done on that, but we'll get in there hopefully soon. You'll be able to comment directly on the shows. In the meantime, you can still post your comments on the various articles in there, and we'll, of course, see them. And if they're relevant to the show, we'll read them on the air. You can also hit us up on Twitter. We're, of course, at Options on Twitter, or on Facebook. Let's look for Options Insider, or just shoot us an email, questions@theoptionsinsider.com. Just highlight in the subject line which show you are referring to. And with that, we're going to close out the old mailbag for today and dive right into Around the Block.
Around the Block.
And welcome to Around the Block. This is, of course, the portion of the show where we dive into what's on our radar, what we're watching for the week ahead. I believe Mr. Girgus and Mr. Tusa, everyone pretty much has hit on it already. And that is, of course, the 800-pound gorilla for this week. That is the non-farms. I wouldn't be surprised to see everyone really keeping their powder dry going into the latter half of the week, because that is going to be probably the largest event coming up on the radar. We do have one name announcing earnings in a couple of days. Not exactly a big one, but still one a few people follow. That is Marriott. They've been somewhat active of late, a little more active than they have been in the past, and we've seen a little bit more options activity, a little more options interest in this name. They are announcing after the bell on the 3rd, so in a couple of days we'll have one more big earnings announcement to talk about this week. But aside from that, it really seems to be non-farms and then Europe are the two things everyone's pretty much watching. Anything else anything else you guys are keeping an eye on for the rest of the week?
Just what you said.
Yeah, there's really not a lot more to say other than that, right?
Yeah, I mean, everyone's waiting kind of for the other shoe to drop. And then, of course, once we're post non-farms, it's really just that mad sprint into the election. You know, the closer we get to that election day, the less fundamentals and anything else really applies. And it's all about what does the latest exit poll say? That's where the market's moving. Of course, I'm not sure. I mean, the market obviously traditionally has had a bias. You know, people argue one way or the other towards Republicans, towards Democrats, vice versa. I think it's a little bit less clear who everyone's favoring, because there's no real clear, they trumpet one as the economic choice, but there's no real clear winner, I don't think, from any perspective. I think both of them have a lot of equally flawed ideas when it comes to the marketplace.
Yeah, I think no matter who wins, we lose. It's like Alien versus Predator.
So who would be the face hugger in this scenario?
I'm not even gonna answer that.
Oh,
one.
Go there. You want to.
I don't know. It depends where you're from and what you do. Who's going to be your face hugger? I think for both, there's a face hugger and a predator on depending on where you are in life. Let's just say.
Yes, I think we've espoused a very clear libertarian bent on this show in the past. Nothing's going to change that right now. I think pretty much anyone who's been involved in the markets professionally for any length of time knows that whoever you put in there is just going to bungle it, so you have to kind of just trade around them for most respects and deal with the absurd limitations that they put in your path.
Yeah, well, it's spectacular. I think, the big thing with Obama is we get more of the same, right? We'd get the Fed moves money from the poor into rich people's pockets via quantitative easing, all right? Then
reverse Robin Hood syndrome.
Right. Then the rich are taxed more by the government administration, and then so they end up not losing. Then that money is taken and given to the proletariat, who are losing from the Fed but winning from the government, and thus we get our cycle of widening wage gaps.
Did you just use proletariat on my show? Did you just say proletariat?
The proletariat. Widening
that might be the
gap.
biggest word you've ever used on this show, sir.
If people want to know why there's a wealth gap, that is why there's a wealth gap. food, oil, everything that we need to buy, the Fed is pumping while they pump the pockets of those of us that have stocks and bonds. And meanwhile, then we just get taxed. That's the plan. And then money gets given to the poor. And it turns into a big system that just screws everybody. You know who we need? You know who we don't need in that scenario? We don't need the Fed, and we don't need the government getting in the way. All right? The wealth gap, you notice the wealth gap started widening as soon as Greenspan started ratcheting down interest rates. And, you got to wonder.
Mark, invisible hand, gold standard Sebastian. That's what I'll start calling you.
I'm not a gold standard guy. No, I just think that we need to have, I don't think it makes sense what the Fed is doing. It takes from the poor and gives to the rich. And I don't like it.
Yeah, I think you can certainly argue that Fed activities, TARP, whatever the case may be, setting a floor level for some of these large firms to have a get out of jail free card, if you will. A lot of the things they've done of late haven't exactly rung the sensible meter too high.
And they've made the banks even harder to break. It's a disaster. And I'm not sure that Romney could do any better though.
Oh, no, so, I definitely agree there. I'm not sure. Despite his pedigree as a consultant, like that's some sort of a great economic understanding. Oh, I was a consultant.
Well, no, I mean, he buying and selling companies, I think, is a little different than a consultant. But
he saved the Olympics.
He founded a consulting firm. Let's say that.
If you could get a straight answer out of him, maybe we'd have an idea, But, we don't know him from Adam. What is he going to do? We don't know. Right? I mean, he's just some guy who is,
just some guy whose dad ran for president and who handled the Olympics about a decade ago. There we go. That's all we really know about him.
We don't. There's zero clarity, zero understanding, zero anything. I mean, we don't know.
And listeners, if you're enjoying this episode of the Political Block, then you have a lot more to look forward to over the coming month as we close in on that big day. And for those of you in India and others who are outside of our local electorate here, then you'll have to just put up with us for another month or so. Of course, it impacts you guys as well, I think, as we've all seen over the past decade or so. Anything else aside from the election on your collective radars? Mr. Girgus, what are you watching here?
Two earnings tomorrow that our desk, has some calls on Family Dollar stores, Tucsaw's favorite.
Tucsaw, lighten up the old tape, Family Dollar.
Dollar General is my thing.
So,
Christmas is just around the corner.
I don't hang out with Family Dollar type people. Dollar General, come on.
Dollar General, that's what it was. Oh, got to update my notes. And also Monsanto tomorrow.
That'll be a good one.
See what's going on in that.
I'm interested in hearing how Monsanto's drought-resistant seed is coming along.
It's saying here Monsanto is the third before the bell, so it might be 2 days from this one. But yeah.
Well, no.
Well, yeah, your last trading day is tomorrow, obviously, but
right.
But the actual announcement is 2 days from now. So yeah, interesting stuff. Of course, anyone trading Marriott there anymore? I know in the past they have been, but is that one getting any love these days?
No.
No love?
No. Right.
All right. And I think with that, Uncle Mike, what are you watching the rest of the week? Apple, obviously. What else is lighting up your tape here?
Just the economic announcements. I'm just curious to see what goes on Friday, and just excited for the upcoming trading week.
All right, and with that, we're going to close out the Around the Block segment, and also, unfortunately, this episode of the Option Block. But before we go, let's check in with our all-star panelists here to see what they have going on at their various outlets. Starting off with you, Mr. Seabass, what's coming up in the land of the pit? I think you have a very big thing coming up tomorrow.
I got 2 webinars this week. I got a webinar with Know Your Options tomorrow night. You can register at the Option Pit website. And I got a webinar on Wednesday, and I'll be talking weekly options. And then I have a webinar on Wednesday discussing the equity VIX indexes, and that both should be a jolly good time.
Uncle Mike, aside from I guess the big thing is the webinar train pulling back into the station tomorrow.
Train arrives tomorrow night. Seabass is driving it. We are pumped. We think that we might have a shot at setting a new attendance record for webinars for tomorrow night. I'm looking at the attendance of it so far, and it's gonna be close, but I think we might be able to break it tomorrow night.
Should be interesting. We'll stay tuned for that. We lost Mr. Girgus, so he had to run. So, of course, I remind our listeners to check out optionsexpress.com. And speaking of webinars, I know I like to curtail most of my appearances to our radio network here and on the Options Insider. Once in a while, I do make a rare appearance off network. I will be doing that this week at the Money Show here in Chicago, talking about the top 5 mistakes of options traders and how you could avoid them. And if you'd like to check that out, you can also surf on over to Options Insider. Will have a link to it, or also you can check out, there will be webcasts, you can check it out online. I believe Money Show will have a link to that, so I'll put up a link for that in the show notes, or you can surf on over to Money Show, search for my name, and you'll be able to register for that live webinar. We'll hit on some fun topics, see how many mistakes I can cram into half an hour or 45 minutes, or however much time I have on stage there. Should be kind of fun. But we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.